back to Unitrader. We are going to continue our look at the best indicator ever with a deeper dive into the hybrid system. I had a comment in the last video that I did on this indicator that it looks like the PVSRA indicator for MT4, and that's exactly what it's based on. Actually, this is just the TV version, so it's free, and that is why we use the PVSRA volume indicator as well. So just so you know, PVSRA stands for price, volume, support, resistance, analysis. All right, in case you were wondering, that is what the MT4 guys called it. So anyhow, let us get into this. At the end of the video, I will go over the levels that I had placed out and the trades that are happening off of those levels in the last video. So without further ado, let us get started here. So today what we're going to look at, we'll do a brief recap of these vectors, and then we're going to look at the pivot lines here, okay? And also talk about the significance of the 50 EMA. So these candles, the vector candles, represent the red and the green are a 200% increase of volume relative to the last 10 candles. And the blue and the pink are a 150% increase in volume relative to the previous 10 candles. So you can already start to glean some decent information, like this pink vector. This has quite a bit of volume. You're comparing it to actually a green vector, so this will give it a little more weight than if this was just a normal candle, right? So just a little bit of a heads up here, and we'll get our PVSRA. So in terms of tick volume, it wasn't bigger than this green candle, but it's definitely quite relevant. All right, so let me just put this on auto and get rid of this for now, and let's talk about this 50 EMA. So on the 1 hour chart, I'm looking at the 50 EMA here. The 50 EMA is this blue line with the cloud around it, and that is really like the heart of this indicator. The PVSRA guys actually call it the dragon. So the rules are you trade with the dragon, don't trade against the dragon, but remember those rules were made to be broken. So you can definitely counter trade the dragon. That is completely acceptable, but you definitely got to be a little more aware of what's going on. So that is usually what we're looking for. We're looking for a break of this a break of this 50 EMA, and then a retest, and then we get in. Especially when you see the first green candle coming off of that retest, that's the kind of time you want to get in, right? Not always, but many times. Also, if you just put a simple horizontal line here, once you break this level, come back, that you could also get in there, or you could just trade it as a breakout. A little bit sketchier, but you do you. All right. So again, the dragon. Follow the direction of the dragon. But it can get a little bit complicated, because if we zoom down to the 15-minute chart, you'll see that the dragon is what they would call sleeping. So it's really not going anywhere. It's pretty static. Moving back to the 1 hour, we have a bit of an issue here. The dragon is coming up to meet price. So price isn't moving away from the dragon and then coming back and retesting it. We've been in this range now since 2 o'clock yesterday. So we're ranging, and price is coming up, or sorry, the 50 EMA is coming up to meet price. So that's not a real sign of strength. So that is something you have to keep in mind, right? And on the lower time frames, it's asleep. So the golden rule is don't trade the sleeping dragon. Just wait till some volume kicks in. Also, that's another golden rule. If there is no volume, then you don't trade, right? So in these very low volume areas, like there's no point in trading. Also, keep in mind, like I always talk about context, 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 right? So we're butting up against some major resistance here. And I will talk about that at the end of the video, again showing you my levels and what's happening. So always have to understand where you are in space and time. Okay, now the question of these informational lines here, the M1, well, the M0, M1, M2, M3, M4, and M5. So these are pivot points, and they're based on the traditional pivot point indicator, which I will, well, I won't because it's just going to muck it up. But what I'll do is I'll open it up here, go into inputs, and see pivot points. We're going to show level 1, and there we go. All right, so it makes it a lot messier, but it's going to be easy to explain. So the PP is the pivot point, which is the center point of your pivots. And then you have S1, which is support 1, S2, which is support 2, S3 would be support 3. And then up to the top, we have R1, which is resistance 1, and resistance 2, and resistance 3. So that is what the pivots look like. And if you use just the standard pivot indicator, you can change it to like Fibonacci levels, and you can do a couple of different things with it. But we are going to turn those back off because it starts to get a little bit intense, too messy. All right, so how these are calculated is based on the previous day's support and resistance levels, and the M levels are actually the median, so the exact midpoint. M2 is between the pivot and your support 1 level of your pivot points. M1 is the median between your support 1 and this would be your support 2 in the median here. And M0 is the median of support 2 and support 3. Conversely, to the upside, we are looking at the exact same thing. So here's the PP line, right, your pivot line. Your M3 is the median between the pivot and resistance 1. M4 would be between resistance 1 and resistance 2, and M5 obviously between resistance 2 and resistance 3. So the way that these are played is like this. You have to use them as confluence. Don't trade off of these by themselves. So we have to have a reason, and the reason may be just like, okay, we've come up to M3. If we reject off of M3, we are going to look 2 pivots below. So from M3, we will look for a potential long down here at the M1. And if we lose the M1, you know, that might happen. But so what are we looking for in terms of confluence? Well, at around the same level, we have this vector that hasn't been fully reclaimed yet. It's pretty much been, but not fully. So that's a bit of confluence. And you can use the vector candles themselves once price action gets down here. So if price were to come down, we lose this M3, come down, and we find support here on the first green vector candle, that's where you would want to get in. All right. So again, if you find support at the M0, you would expect price to go to the M2, not guaranteed, but that's how we play these, all right? You go from 1 to the 2 above or 2 below, right? So from 0 to 2, from 1 to 3, from 3 to 5, and exactly the opposite from above. If we reject off M5, we'd expect it to go down to M3. If we reject off M4, we expect it to go to M2. And if we reject off M3, we expect it to go to M1. If we reject off a 2, we would expect it to go to 0. So again, just the median of the standard pivot points, right? So other than that, we have a psychological low. And honestly, I have no idea how they calculate this psychological high and low, but I can find that out. And these actually play out really well, I have to say. So again, when you're looking at them, look for confluence. Like on this psychological low that we have found support on, it was resistance, 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 along with the dragon, the 50 EMA, right? And then we come above, we spike through, come back, find it as support, and then we're off to the races and we reclaim this 50 with this green vector candle. So this is a very decent trade here. It is the first green vector after coming back and pretty much reclaiming this one. And we're above the psychological high now, and we're above this 50 EMA. So you could enter right after this green vector candle. If you wanted to get really aggressive, you could have actually entered right off of the dragon, off of this retest. Okay. Now, the other stuff is pretty self-explanatory, right? Yesterday's daily low, yesterday's daily high. These are all relevant. We also have the high from the 14th there. So that's pretty relevant as well. So you'll see that marked off as last week's high. So these are all levels that we're looking to reclaim. If we can't reclaim them, then we're looking back down, right? Okay, so other than that, what have I missed? Nothing. That is about it. Okay, so I'm just going to clean this up for a second here. I'm going to hide this, and now we'll talk a little bit about strategy, okay? All right, so what we are generally looking for, like for example, Tino, not for example, exactly. This is what Tino from Traders Reality teaches. He's always on about this specific pattern. So I'm just going to draw it out for you here. We get 1 push to the upside, 2 pushes to the upside. Come on, magnet. 3 pushes to the upside. I'm going to widen this out so it looks a little bit better. And then we put in a topping pattern, which we usually look for M's. And then we'll get 3 pushes to the downside. So 1, 2, and 3. And so that will complete a market cycle. And then what we would want to see down here, ideally, would be another W. And then we break the W and do 3 pushes to the upside. Put in another M. So that's ideally what it would look like. Now, if we just think about that pattern without messing it up with an actual chart, we'll make it as clean as possible. We come down, put in a W, push up, One push out of the range, two pushes out of the range, and then we put in a topping pattern, come down, maybe, so one push, two push, three push out, and then we would again repeat and put in a W. Now, it very rarely is going to look this beautiful and perfect, right? So what you have to, so you have to kind of be aware it's not always going to look like, well, it rarely looks like this. But look for W's, look for M's, and then pay attention to these pushes. And if you think about like Elliott wave theory, it fits right in, right? Because you're going to get a 1, 2, 3, 4, 5 wave down, do a little consolidation, and then you will get a 5 move up. And in this consolidation, we're looking at a 1, 2, 3 sort of correctional wave. But that is neither here nor there. So many times, instead of getting a W, you're going to get a V, and that's just stuff that you kind of have to work at this and start to really understand how the market moves. And this is the best indicator to do that, in my humble opinion. It really is. So the philosophy is that we are in this game, and there's a guy with huge pockets who's trying to take our money, right? So when you have this happen, we're looking for green vector candles in the up, right? And on that first green vector pushing up to the upside, that's usually a great opportunity to get in. But you can also wait for a retest of, let's say, this level, right? And that's actually Tino's, I mean, his is a little more perfect, but that's actually Tino's logo right there, right? So that's the point of that logo Tino's got on Trader's Reality. That is a pattern that he gets his beginners to watch for all the time. Watch for this, get the retest. So let's say this was actually there, right? Come back down, get the retest off of this support, and that is a potential entry. But what he would do is actually enter here. So let's say I can put in another line here. So once you take this, once you break this, get in your trade there. All right. But the beauty of it is really to kind of understand exactly what is going on here. So a green vector candle, huge volume candle at the bottom of this move indicates that the market maker is pushing price up, and most likely you've got quite a few trap shorts down here, because that's what he was doing, was filling people's shorts, or everybody, including retail, saw this and jumped in, and we pushed price up. And he, now the market maker, is filling those positions and putting shorts in here. So he's going to have to come back and get that vector candle, right? And that's going to be a ton of liquidity here. A green vector candle really just represents a ton of liquidity with stop losses or even liquidations below. So once we do the retest, you'll usually look for another set of, or one big or a set of green vectors pushing up. And now this is purely the market maker filling shorts as retail is getting long, right? So this whole area here is going to be reclaimed, and the same thing would happen here. So as the green vectors are showing up on this last pump to the upside, Mr. Market Maker, the liquidity provider, is going to be filling in those longs by opening shorts, right? And then at the top, again, we look for a topping pattern and wait for it to break down, and you'll see the cycle repeat itself, right? It might, well, not that it might, it rarely kind of stays in a fixed range like we're making this out to look, right? So it's going to be a little bit uglier, but we still look for those patterns, right? So for the most part, the price action won't be that easy to read. You really kind of got to get in there. But let's say we break up. If we're in a directional market or a trending market, we will still have this exact pattern play out, right? But it doesn't mean that it has to go all the way back down, right? It might just do something like that, put in a quick W there, or maybe even a V shape, and then we'll power out of here. Oh, come on. So something more like that, you know. So don't look for it to come back and hit the exact bottom where the first W was placed. That's where we have to understand the dragon, right, and market trend. So if we're in a bullish market structure, it's not going to come all the way back down, and same goes for the reverse. If we are in a bearish market structure, don't expect price to come all the way back up and clear all the vectors out right away. It will happen, but sometimes it takes longer than other times. Okay. All right, back at it. So in terms of strategies, there are a ton of strategies for this, and what I would recommend is that you come up with your own. This is the best thing to do with any sort of indicator, because you'll hear a lot in the market to find your edge, create your edge, or secret sauce for your trade setups, and that comes from you actually playing with this stuff, writing down, journaling exactly what went right, exactly what went wrong. That way you learn what to avoid and what to look for. And that is why I use still a lot of horizontal levels. Like I've started as a horizontal trader, and I am still a horizontal trader, but I've incorporated this into my trading style, and I use it more and more and more because it's absolute gold, this indicator. That I have to say. So having said that, I believe that's about it. That is about it. So if you have any questions, just drop them in the comments. I will reply. If need be, I'll make a video about it. So now I'm just going to shut this off real quick. And I'm going to turn all of this stuff on. Nope, that I actually don't need. And I'll turn all this jazz on that I had for my last video talking about my weekend setup. So these are all the levels that I have created on the weekend. And I'm just going to move this down to the 15-hour chart and explain exactly what has happened. So remember in my previous video, I missed this short because it happened on Sunday, but I had this level already painted out, and that was because of two anchored VWAPs sandwiching this daily level, and then we also have this weekly level right above. So I was really interested in a short here, but it played out on Sunday, and I don't trade on Sundays, unfortunately, because it was gorgeous. So the first trade I actually got involved in here, I'm going to turn on was right here. So after we broke this level, we came back down, retested, found support, and once this green vector printed, I was waiting for a retrace. So we came back down, and I actually mentioned in my last video that we might break above, come back down, maybe even find support on this weekly. I specifically remember saying that. I might not have, but I specifically remember doing it. And that's where I got in. And then we came up to this lovely level, which I was waiting for a short. And why it was actually the, I'm going to have to go to the 1 hour on this. No, it actually works on the 15-minute. So you see on the 15-minute here we have this green, this red vector. So we came back up and just wicked through that, reclaimed it, and I will drop this down to the 1 hour because it looks exactly the same. So this level was on the 15-minute and the 1 hour as a red vector, which I hadn't even noticed because I charted that just on the 1 hour. But that was what I was waiting for, and this big yellow rectangle that I have here is simply a very basic pull. Sorry if I'm going too fast here, guys. Here, I'm gonna mute this noise a bit. So this is simply a supply area that I drew out by starting at the top of the body of this last green candle and the bottom of the body of the next bearish candle. So very simple, very simple. I would never trade this on its own, but the vector candle was quite lovely. And the other thing, when at this point, hold on, let me bring it back down to the 15. And at this point in the game, when we got here, the value area low was all the way down here. So we had this, again, if we look at this move, we've done 1, 2, 3 moves out. We're way outside of the value area. And let me now bring back the noise. Oh. Just so you guys get a good understanding here. All right, so 1, 2, no vector candle here, but this third move to the upside, we finish on this green vector. And when you're getting these green vectors at the highs, that is a huge indication that retail is FOMOing in long and market maker is filling in those positions with shorts, and then we reverse, and it was quite a lovely day trade. So we then established this as our value area high. Pardon me, guys. So first trade, or first short, and that's all I did yesterday, was took this long from here, took a short from there, and I left it alone for the rest of the day. And today, I did take this short, and I'll explain to you why. So we're still in the same area. We had come up and tested once, tested it twice, and this is a very, very common price action setup where you have one test of the high, a second test of the high that breaks this high, so we definitely got higher on that one, and then the third fails to take out the second one, and that is a pretty standard setup called the 1, 2, 3. So sometimes you'll get a third and then it'll happen on the fourth, but very, very, very common thing that you'll see. So I got in here and that is all I've done today. I thought about taking a long here, especially because the pivot is right here, and we had this red vector, but this is getting a bit sketchy for me right now, so I'll show you more confluence here with the beautiful TDI. Okay, so if we look at this first high and this second high, you've got massive bearish divergences, right? So what do I mean here? So we put in this high, so you can see on the TDI the price line is moving in a downward slope, and obviously from here we're putting in higher high, right? So lower low on the TDI, higher high. So then it was just a question of really getting a bit of a retest here. Once I saw this wick reject, I got in there. Okay, now today it's going to be a little bit crazy, and right now we are in this US Brinks box, so I'll talk quickly about this Brinks box. This is a very dangerous time to trade because New York is ruthless at the open. You're generally just going to see them shaking people out like mad. So be very careful. 230 is a tough time to trade. Very tough time to trade. So here we are. 230 New York open, and here comes the volume. So red vector candle. This should be interesting. And now we've just found support. Sitting here at the mouth of the dragon. So the 50, will it hold? This is also the VWAP right here. So this blue line, I will, you see it disappearing and reappearing. So the VWAP right now at 19.5725. Will it hold? Will it hold? Who knows? But one way I do trade this open, but again, it's pretty gnarly, and I probably would have done this today if I wasn't making this video, but no big deal. I'm already in a short, and I'm fine where I am. When you are above the value area high on New York Open, or at the value area high so far in the move, what you'd expect New York Open to do is try to come out and take the highs out and then reverse position. Now it hasn't done that. So is this just the initial shakeout here? It may be. It may actually wick right back up right now and then come up and try to take these highs. If it fails to take these highs, it will usually at least visit the value area low, and it will then try to come out and take out the daily low. So let's see what happens here. So here we are, just above the daily open. There's your daily open. You'd expect at least a retest of that. But again, New York Open does not play fair. They don't play by the rules. What you're going to see is they're going to rip it down, they're going to rip it up, all within the first, few minutes of trading. They will do that quite a bit. But this could actually be a sustainable move down. We've got started on a red vector from this high, but let's see what they do. Let's see what they do. So I'm just going to stick around here, guys, for a couple of minutes just to see if New York kind of shows us how to utilize this lovely, beautiful indicator. Well, not doing much. I mean, doing quite a bit. That's already a massive move here. But this is a good indication of just how volatile. So we're talking a 0.62% move in less than 15 minutes. In 10 minutes, basically, really. No, sorry. Yeah, less than 15. Huh. Again, the importance of the volume profile. So our daily volume profile, we've so far finding support on, well, it just moved. Did you see that, guys? So the point of control was right there, exactly where we rejected off, and the point of control just moved up. So there's good volume coming in here, and this is why the point of control is moving. Oh yeah, New York. So again, this is going to turn into a vector candle, I have a feeling. There it goes. There's a vector. So this is now not the market maker, trying to push price. This is now retail who crap their pants because they saw this. So there's quite a bit of interaction happening here. And this is the dumbest place to take a trade, honestly. Right here, we were right above the point of control for the day. We're playing with the dragon, so a horrible place to go short here. It is insanely irresponsible. Unless you were scalping it, if you saw this red vector come in and you got out here and took a quick scalp, that's fine. But if you're doing a day trade, a horrible place to open a trade in both directions, honestly, because they're going to shake us out. This is all that's going to happen during this half hour. So the only thing that you could have done here is taken advantage of this blue vector. And again, here's that line, which was that original vector candle that I had marked out here, that 1 hour and the 15-minute. So that's a pretty decent level so far, showing us some pretty good respect. All right. Okay, guys. I don't want to make this a 2-hour video, so I'm going to end it here. Watch how this plays out, though, over the next, 20 minutes or so, and see what happens at 3 o'clock. Usually, New York will rip it one side to the other and then continue on with the true move. So let's see if this really does continue to move down. I would love it if it did. I would love it if it did, but I would also love it if it went higher. So, actually, I'm not going to end it there. Remember, if we lose that, start looking at the pivot point in the M2. We've lost M3. All right, that's M3 up there, correct? Oh, I got too many rectangles to hide. Yeah, M3 is being covered by that candle, yep. So we came up, tried to claim M3, we lost it. So let's see if we go all the way to M1, or let's see if this is just a classic New York fake out, shake out, and will it rip to the upside? I can't see that happening, but you never know, it might do it. You never know with these New Yorkers. All right, guys, so I hope that was informative. Sorry if this was too long, but just watch what this New York is doing and see if you can make heads or tails out of these pivot points and the daily open lines, and watch out for these vectors, all right? Again, I'm going to say one more thing about the vectors. So we had these pushes to the upside here. I wouldn't take this red vector that seriously just because it's right at the New York Open. So just wait and see what happens. We might just come down here and take out the value area low, or hit this pivot and turn it around. We have not hit that pivot point yet today. And one thing that I will say is these pivot points are gold the first touch. So take a look at that as well. But generally, from the data I've collected, over 60% of the time, the first touch off of this pivot, it will actually reverse and give you a decent trade. And then we would be looking up to, yeah, around M3-ish. That's where I would take my first profit. I would take my first profit actually at the point of control, wherever it lands up being. All right. But that's it. Thanks, guys. Any questions, leave them in the comment sections. I'll get back to you. Remember, be safe and be well, and I will see you on the next one. Thanks.